We were talking about the TSX being under pressure today. Maybe it's time to think about diversifying your portfolio. And Mark Lackey usually comes in and talks about commodities and small cap companies in the commodity space per se. But he's changed up his tune a little bit, in part because he had some tremendous success last time we were talking small caps with you. Mark Lackey, CHF Capital Markets.
Well, we did, Pat. We put 3 companies on, 2 of which actually went up, 10-15%, and then 1 company that almost tripled in the last 6 months that was in the non-commodity space. And what I found, Pat, is that there are a lot of interesting companies coming out of cities like Waterloo and other parts of the country that are technology, biotech related. And while there's still a small number relative to commodities, there's some great ideas out there. And I think that, there's not a lot of following in the media of the small and mid-cap markets yet. That's 80% of the new jobs in Canada tend to be created by small and mid-cap companies.
Yeah.
So I think it's really important for us to start to look at opportunities. And I try to get to the point where I see a company that's reached a certain number of milestones and I know they're going to be relatively successful and they could be hugely successful. That's when I start to recommend them. And that's what you'll see today, that, one of the companies here today I wasn't recommending 6 months ago, and they've now gone along to the point where they've reached a bunch of milestones in the last 6 months.
Okay, but how do small caps typically do, whether mining or otherwise, when you're looking at an economic recovery just getting started? And you're looking at the TSX, which are the large caps, doing pretty well.
Well, the TSX have done great. And if we look back, Pat, if we look at the venture exchange, for example, back in 2007, we were at 3,600 when the TSC was at about this level.
Yeah.
Today, we're sitting at barely over 1,000. So the venture has not recovered. Although I would point to people, if you look at the Russell 2000 in the United States now, I realize it's a far more diversified index, but it's actually recovered quite well. So, here what's held us back somewhat has been some of the commodities that have been weaker than normal, and the fact that a number of mining companies unfortunately don't have a lot of money.
Right.
And that's really hurt them. Whereas if we look at some of the non-commodity companies, I'm saying it's time for people to recognize that I think over the next 5 years, if you pick the right companies in the right sector, I think you can clearly outperform the TSC index by buying small and mid-cap companies. Okay,
let's look at some of these names. And obviously I don't know them that well because the small caps I'm not as familiar. Peak Positioning Technology.
Well, now this is a company, Pat, I've known for about a year. And again, my view has changed dramatically because in the last 6 months they started to reach the milestones that I was waiting for them to do, and that's what they've been able to do. So now they have 3 clients in China, in the software business, China Unicom.
What do these guys actually do, though?
Okay, so they actually have cloud technology.
Okay.
They have other software technology. So the software technology is going to China Unicom and in smartphones.
Yep.
The e-commerce business they have is with ICBC Bank, the biggest bank in the world. And ICBC wants to take on Alibaba, who I didn't realize you could have a bank account with Alibaba.
Oh.
Even though it's not a bank.
Yeah.
A lot of people have moved their accounts there because they buy things online through them. So the banks want to go back and compete. Well, one of the ways to do this is to use some of the technology that Peak has developed. And third case is that they have cloud technology, which they're selling to China Telecom. And of course, here's a case, if I'm a small Chinese business, do I want to hire my own IT department? No. I'd rather rent the service from China Telecom. So I think what's happened here with Peak, their revenue last year about $3.5 million, getting up to about $5 million at the end of this year. But I think the revenue growth can be spectacular because a lot of these products now are going to be rolled out in the next year. So I would suggest this is the time to look at a company like this where you now have got everything in place to move forward.
Okay. Pacific Safety Products.
Okay, well, in fact, Pat, this is the company that we put on back in January, and the stock price is almost tripled.
I thought it sounded familiar, yeah.
Yeah, that's right. The stock price is almost tripled. Now, again, this company's been around for a while. And people said to me, well, why did you start liking it in January? Because the management changed the previous year. They brought in new management that was far more aggressive, cut costs, recognized they had to really go out and market their company better because they're in soft armor, vests, and they recognized there were other competitors in the marketplace. But they had actually superior products because they designed, for instance, their vests for men and women differently. It wasn't one size fits all like some of their competitors. So they had excellent products, they just had to get them into the markets. And the new management's been able to do that. The revenues are up 10% year over year, the earnings have gone up 7-fold. So I'm not surprised that the stock has had a pretty good move. But if people think, well, gee, Mark, it's already had a pretty good move, I just think they're getting started. in terms of this whole turnaround. And when I look at what's in the pipeline and the potential deals that they can have with national defense and other police departments, there's some excellent growth potential. And it shows you, Pat, with the right management in a turnaround situation, what you can do to a product that was kind of limping along for a few years.
Well, and it's interesting you bring that up, because I guess you're talking about an economically viable corporation, whereas in the past it may or may not have. But do you think the Moncton shootings of the RCMP brought attention to a company like this, and all of a sudden?
Well, actually, Pat, it was moving long before that happened, but after that unfortunate shooting, I certainly got people calling me up saying, what about these kind of situations? And sure, people want our police department and our national defense people to be taken care of as well as possible. And so I think, yes, I did get more calls after the Moncton shooting, but I quite frankly was getting a lot of calls after I first put the stock on TV, because people who knew the company said, yes, this is a turnaround, and other people said, this is an interesting idea that I had never heard of until I happened to watch the network.
Oh, okay. Last one, Prism Medical Incorporated.
So, Pat, this is a company, again, they have good growth potential. They produce a lot of products that help people that have mobility issues. So lifts, chairs, shower chairs, a whole variety of products. And you may say, well, somebody said to me the other day, that's not the most exciting company. And I said, well, I don't need excitement. They are making good profits. They're paying out a dividend that yields 4% for a venture company. And the other thing, Pat, is the dividend's only 50% of the profits. That coverage is better than the vast majority of dividend payout stocks that we have. And the other thing is they have a niche market, and of course it's growing because the population's aging. And using their products has actually helped reduce health costs in hospitals and long-term healthcare operations. So I think that this is a company that has a lot of potential, and in fact, I view it as a potential takeover candidate, given that there's bigger people in this space who do other things, that this would certainly be accretive to.
Is that not true of Peak and Pacific Safety?
Absolutely. Now, the difference is this company's been around longer, has bigger earnings, and is more established. I would say both Peak and Pacific Safety could be takeover candidates down the road. I don't know that anybody would walk in and take them out yet. I think they'd probably wait another maybe year or so, see how they go, see how they execute, and let's see the revenue growth. And then, of course, you're right, any one of these three could certainly be a takeover candidate down the road, potentially.
You know, two of the three that you've talked about, one is 3.5 cents, one's 20 cents, and one's $7.65.
Right.
When you talk to investors, does the one that's at $7.65 have more credibility?
Well, I think if you're looking for a dividend, yes. But investors, I find, tend to judge companies individually. A low stock price may turn some people off, but other people may look at it and say, well, there's a real opportunity here, because frankly, these guys have come along and now they're finally at a point where they're going to do something. So, as I said, when I was last on, what was Pacific Security at, Safety Products was at like 8 cents. And that might have turned some people off, but now it's at 20, and people are going to say, gee, I missed an opportunity. Well, I would say you haven't missed it yet, because there's still more upside. But you're right. The people that buy the $7.65 with a dividend have a probably different risk profile than the people who might buy a 3.5 cent stock. But it's like everything else, Pat. I mean, only buy what you can afford and recognize the risk. But there's a lot of 3.5 cent stocks out there that I don't recommend, because they aren't in the position that Peak is now in. So I think that's what you have to look at.
Mark, great to have you on again.
Always great to be here, Pat.
Mark Lackey, CHF Capital Markets. Quick break.